I was very surprised by the rotation that we saw in crypto last week. And I want to break down why we saw the rotation that we did and what I'm talking about. So if you don't know, I'm a growth hacker in crypto. I have been for 3.5 years, founder of Magnet. We've hacked growth for dozens of projects, combined market caps over $1 billion. I like to invent things in the crypto growth domain as well, such as the Magnet method, which became a best-selling book. And I tried to take a look at the market from a different angle and more from a business perspective on the business side and what the projects are actually doing, and of course growth. And something caught me out this week was this rotation. And when I look at it from a way that kind of a project attracts capital and token holders and buying volume into their projects, there are very, very important things that projects have to consider. And this rotation showed us a lot. So let me get into it. So the rotation that I'm essentially talking about is that when everything started pumping, we saw a rotation, not just into smaller altcoins, but a big rotation into some meme coins that ran earlier on in this cycle. There's two main reasons for that. The first reason is because memes, and specifically these memes, were already such a big theme of this current cycle that we're in. It's been such a dragged out long cycle, but they're still a big part of this cycle. So the likes of Peanut, Go, Whiff, so on and so on, these coins all started to run quite a lot. Some of them were 2xing. And it's the other side that I really want to dive into, because this is important for anyone that's growing a project. This is important for anyone that's looking at a project, a healthy project to potentially invest in. And to me, it all comes down to liquidity and how good of a market it actually is for someone to participate in. Now, when you look at some of these top coins, even though they ended up losing 80%, 90% of their value, some of the coins were at $1 billion and were back down to 50 mil market caps like Go. They still had such thick locked liquidity, millions of dollars. Their liquidity to market cap ratio was very, very strong, which means when people are like, right, what's the next thing that's going to run? They look at the coins of the cycle that had run. Then the next part of that is, okay, well, am I just going to get rugged if I buy this token? And when you look at some of these tokens, obviously a lot of value and top holders have already sold. Therefore, the token distribution is fairer. And on top of that, people can get in and out with size because the market's liquid. If these tokens only had, say, 100K in liquidity, there's no way they would have caught a bid, because no one's going to go and drop 10K into a market when they know that if they get front run and someone else sells before them, liquidity gets sucked and they might never be able to sell. And on top of that, if they do manage to sell, the price impact it will have and the fact that they might actually not be able to sell for the price that they want to. And this is a big fault in crypto overall from a growth perspective, which is what I look at. And that's whether projects can actually create sustainable markets for retail and for users and so on to come and participate in. And although these coins actually do nothing, they're part of a narrative. And then on top of that, they have markets that have good on-chain metrics that people want to participate in, whether that's to do with liquidity, whether it's to do with token distribution. The token and your market is always going to be one of your greatest growth assets in crypto. And the problem is, a lot of small altcoins, they don't offer these playing conditions. They just don't. Think about it from like a football perspective. You turn up and you play at the Bernabeu, or you turn up and you play Sunday League on a muddy pitch with glass and beer cans on it. Where would you prefer to play your football if you had a choice? You'd rather play at the Bernabeu, right? Because of the conditions. And it's exactly the same in crypto. So a lot of small altcoins, they might have done a really aggressive pre-TGE, which all it's done is led to excess selling pressure because of all the tactics they used to try and get a successful pre-TGE off the ground. And then they also never thought about creating a market that people want to participate in post-TG, creating that healthy market. A lot of meme coins did the opposite. They launched low and the communities built the markets up. They created good conditions for people to want to play in. So that's why we saw a good heavy rotation into these coins. And when it comes to crypto growth, if you have a good market, you have token holders that are happy, this is how you activate a network effect. This is why meme coins grew as aggressively as they did, because people bought they started to shill their own bags. That then created such great awareness for these tokens, and then people would come to these tokens, see that they're good markets to get involved, which would push the token higher, which would lead to more token holders that are then shilling their bags even more, and then token go up even more. So it's just a self-fulfilling loop, and it always comes back to the success of, say, a pre-TGE campaign or the success of the TGE. If nothing else past that point is thought about and conditions are created through those activities that make it hard for a token to be able to be nurtured well, then being able to create that network effect from that moment onwards is always going to be tough. So whenever we're working with projects at Magnet, we're always helping them look ahead in time and understand that the decisions that they're making now to do with their tokenomics, to do with their pre-TG strategies, will impact what happens post that point. It's not just about impacting the token, it's if you create a good marketing token, how powerful that is of a marketing asset basically moving forward. And we're seeing that at the moment with Hyperliquid, right? Hyperliquid launched a good protocol. So when you look at Hype, it's the talk of the town, and it's the talk of the town because every DGen is participating in Hype. It's such a great market to be involved in. And there's things that Hype are doing, such as buybacks, such as revenue sharing and so on, that create buying pressure for the token away from just speculation, so that they're naturally creating a good market without having to just bank on people coming in when the market's right to speculate on Hype. So yeah, and as I mentioned, this is what we're always trying to talk to projects about and coach them on through some way or form, because this is super important. It's one of the reasons why crypto and a lot of altcoins are as unsustainable as they are and just crash 80–90% when the market's out and then struggle to recover. That's the game, unfortunately. So if you like the sort of content to do with looking at the business side a little bit more, trying to dissect why tokens grow and why projects grow versus why they don't grow, then drop me a subscribe. This is the type of content that I want to bring to the space. I guess if you do subscribe, I'll see you in the next video.